Welcome back, all. Paul Meeks here. Here is Tech Tune-Up, our weekly show that's typically divided into three segments. First, I talk about the tech news of the day, or at least over the last week, but try to tie together some broader themes that can help you as a tech investor going forward. I also freely share my buy list and also what I like to call my waiting list of stocks that I want to buy, but they're just not there on price, or they're just not there for a fundamental catalyst that I'm looking for. And then, as you know, if you're a faithful follower, we have a segment called Tech Trends. And this is kind of interesting because today, after doing this show for a year or two, I am going to have my first guest ever. And as when we get to that segment, I'll talk a little bit about how the segment may change going forward, the firm in which I'm affiliated, and also introduce today's special guest who is going to delve deeply into a single super important tech trend. So as investors, we can get way ahead of it because we're going to be talking about things that may not even be happening in the public markets, but at least for now in the private markets. So let's start with the first bit, the news and its broader implications. I thought it was very interesting when I read in the Bible this morning. I refer to the Bible as the Wall Street Journal. So hopefully I don't get struck by lightning here in my home for saying that. But Amazon is pushing aggressively, or has already pushed aggressively, into AI-driven robotics. So the company has 1.6 million full-time employees. Obviously, they hire many more around the holidays to deliver packages, but they already are using 1 million robots. They also claim that 75% of their deliveries today are touched by one of their AI drivers. So this will be very interesting. And if Amazon does it, what do you think happens to the rest of the global e-tailing world? They all will fall in line. So keep an eye out for that. I will. Remember, Amazon has long been on my list. I think it's very interesting that Elon Musk's XAI has just done a combo equity and debt financing totaling about $10 billion. Obviously, the race to develop the least expensive, most effective large language model continues. And we'll see what happens. But it seems to me the ecosystem that it has already built has OpenAI, which has some issues of its own that we'll get to in a second, at least technically, and with the number of users and its grip on both the consumer and enterprise customers pretty tightly. So next, one of our best picks over the last several months has been Robinhood. Robinhood has gone straight up, and they've announced that they are going to get even deeper into crypto. Remember, one of my theses for investing in this stock long ago had been that it might be an indirect, less expensive, more compelling way to play crypto in the investment markets versus buying things like Bitcoin itself. So no surprise, Robinhood aims to be the digital assets trading hub. And today's announcement just further proves that. Very good pick here on Benzinga over the last several months. Since we last got together, Micron Technology announced its quarter. This is a company that's been on and off my list over time. I follow it very carefully. Actually been covering this company since the 1980s. They announced their quarter, and the tale of Micron, which is a semiconductor company that makes memory chips. It's a good and a bad news. The good news is their DRAM business is on fire, driven by HBM, high bandwidth memory, used in AI applications. Had been accelerating, they just upped their game, and the guidance is very strong. Probably for the next 2 years, that particular product line for Micron is at full capacity. However, the bad news is they have a NAND flash business, of which the pricing in that business has stunk for a while starting to improve a bit. But these are flash memory chips that are most often found in consumer electronics like your smartphone and your laptop. And obviously, those markets are super competitive and those markets are very mature and slow growing. But we seem to have an inflection point where at least Wall Street is now taking a look at the exciting AI driven high bandwidth memory business and is putting on the back burner the commoditized flash business. I've always been looking for this inflection point, but it looks like we're here. The stock, since they reported their quarter last week, actually has come down a few bucks. But the thing was, everybody was expecting a blowout quarter. They pretty much delivered, but the stock had risen probably too far, too fast into the print. So here is what I do. Watch the stock continue to consolidate and look to either add to your position or start at least a nibble starter position when the stock troughs. And what I look for, I now go from being fundamental analyst to technical analyst. I'm looking for the stock to find support at moving average prices. Maybe the average trading volume dries up, so it looks like the selling has been exhausted because the stock's now in the 120s. I do believe, as I said a year or two ago on this show, that over time, not in the near term, but over the next couple of years, I think this could be a $200 stock. I'm sticking with that. So we'll see what happens. I think on a more macro level, the news coming out of Canada is very significant. As you may know, Canada was about ready to implement a digital tax on e-commerce sales from everybody's companies, not just American companies, to Canadian users. And it was going to be pretty stiff. It was going to be 3%. Now, obviously, Trump doesn't like this, and he stopped on a dime, trade negotiations with Canada, and I got to give him some credit. I criticize him here on the show, as you know, but I give him some credit that he did force the Canadians to capitulate. They eliminate that tax or they don't implement that tax, and now they are back to negotiations. Of course, these negotiations are supposed to be wrapped up for everybody by July 9th, and today is July 1st, so that's only 8 days away. So I bet we're going to be disappointed with the level of tariffs and the deals that cannot be concluded in the next 8 days. Nvidia's CEO, who is the Steve Jobs-like rock star of the 21st century in Silicon Valley, he is echoing the theme that I just talked about with Amazon and AI-driven robotics. He claims that robots will be the next AI, not small use case, huge use case. He's calling it physical AI. Of course, right? These are all marketing terms, but if Nvidia is going to drive it and Amazon's going to drive it, it'll be happening. So that's interesting. I also thought a very interesting legal decision by a federal court judge recently that Anthropic, which is another one of the large language models, it has the Claude model, actually skated through with a positive decision that they can, when they're building their large language models, scrape the internet and take data from copyrighted books. So that'll be interesting. I don't think it stops there. I think at some point, what is the conclusion of the battle between creators trying to protect their intellectual property and these builders of large language models? Anthropic and its Claude model, only one of them. I imagine that over time, the next year or two, of course, this is going to go to the highest court in the land, the U.S. Supreme Court, and they will decide it. It'll be very interesting. I've always been stunned and disappointed that after all these years, the reigning legislation in the United States of America for the internet is a act that was passed all the way back in 1996. Here we are in 2025. Haven't really been any tweaks. So you have to have guardrails. You may not like regulation, but you have to have guardrails to go forward. So I think this will be a test case. I bet it goes all the way to the U.S. Supreme Court. So this is very interesting. You have probably been reading along, just like me, about the conflict between OpenAI and Microsoft. So the deal is OpenAI desperately needs funding, and they have funding of $40 billion lined up to continue to build out their AI capabilities, including data centers or data center partnerships. But they need be able to confirm this big capital contribution from the Japanese company SoftBank. They have to, by December 31, successfully transition to a for-profit entity from the current structure, which is a hybrid, but essentially a non-profit entity. And you think that would be great. SoftBank wants that, OpenAI wants that, everybody else wants that, except for Microsoft. And Microsoft is a 40% plus owner of OpenAI. They have right now exclusive rights to their IP. And so this will be very, very interesting because OpenAI and Microsoft will negotiate. And hopefully, OpenAI hopes on the other end, without giving too many concessions to Microsoft, that Microsoft will not block them from becoming a for-profit entity because they don't get all those shekels to build out their data center until they become a for-profit entity. And again, the deadline is December 31, 2025. Apple is back in the news. You know, I've been poo-pooing Apple for a long time. The problem here, it's a no growth company, right? iPhone is 60% of sales, and iPhone units haven't grown in about 4 years. Now, the business unit has grown a little bit, but just still a couple of percent, which I think is still disappointing for a tech company, just based on increasing price. And we do know that if Apple is going to build iPhones in the USA, and try to somehow, which I actually think is impossible, eliminate this Chinese supply chain, which is very complex, very intricate. If they start to build the same iPhone in the United States, your iPhone is not going to be $1,000 on the high end. It's going to be $3,000. Who's going to buy a $3,000 iPhone? Nobody. And so I actually think this is a really big problem. I think to bolster their growth, and they're desperate for that, they have to make a bold acquisition in the AI space. And I do know that they are talking, or at least have had conversations with the private company Perplexity AI. I think almost regardless of price, because they have the balance sheet to support it, they should do it aggressively. Unfortunately, with Apple, going all the way back to the Steve Jobs days, they have a culture of it ain't good unless we make it. And so they very rarely do acquisitions, and they're typically not even close to being needle movers. So please, Apple AI, become Apple AI by merging with Perplexity. Musk and Trump continue to battle. Did you ever think that you'd have two alpha dogs in a small kennel and they wouldn't ultimately fight? Their relationship lasted all of 4 months. And now you can see that it's starting to really impact Tesla. Tesla is down today, based on Trump saying, well, I think we should circle back and look at all the subsidies that the government has given for Musk's business, including Tesla. And obviously that's a big, big problem. So anyway, I talked about it as soon as the president was inaugurated and they announced that Elon Musk was going to be involved with Doge. I said it couldn't last. Those two personalities couldn't last, and it didn't. We have some very important deadlines coming up that impact not just tech investors, but all investors, right? As everybody knows, the president hopes to have passed by this weekend, July 4th. July 4th is this Friday, the big, beautiful bill. Maybe it happens, maybe it doesn't. And if it does happen, what concessions need to be made to get the necessary votes for passage? So that's going to be a really big thing. Don't think that it's insignificant kind of background news. And of course, the one that is even more significant is the July 9th deadline for all these tariffs. right? July 9th has always been the drop dead date unless it's extended even longer for the US to start to charge or implement these tariffs. So we'll see what happens, but I don't know. It has me, even though tech stocks continue to rally, except for today, taking a little bit of a hickey. Um, I'm keeping powder dry because those are two very, very big ifs. Super impactful. And the last thing I have here is if they weren't aggressive enough, Meta has just announced their super intelligence lab, which essentially they've tried to poach all of the best and highest price AI engineering talent in Silicon Valley and even broader. And they're bundling it under the former CEO of Scale AI, which they just bought for $14 billion, essentially to capture their talent. That's a pretty expensive HR talent grab. But Meta is telling you with this that Mark Zuckerberg and company, super, super aggressive, super, super serious, and that the AI infrastructure nuclear arms race will continue, not through 25, but probably for a couple of years beyond. So let's next get into the tech picks. As usual, I give you my list. No hiding here. If you can't read it on the screen quickly before we take it off, just reach out to us. I'm easily found. Benzinga is easily found, and we can give you some ideas. Some of these stocks are pretty expensive. I'm actually a little bit surprised, actually more than a little bit surprised. I was not surprised on Liberation Day that the market cracked. And we went from the February top this year for the NASDAQ to the trough at the end of April. We had a bear market. NASDAQ was down 19%. But I am surprised that we've had such a full and quick V-shaped recovery because, like I just said just now, there are some big macro issues to be resolved. Some of those questions, some of those deadlines, and some of them are coming up in just days. But even though I think some of them are expensive, so I'd worry a little bit about maybe buying full positions, maybe you go in with just toe hold. But here's my best of best on the tech side. AppLovin, Take-Two Interactive, Taiwan Semi. On this program, you and I have done very well with buying some drug distributors. Meta, Microsoft, Nvidia, Lyft, which I had poo-pooed for a long time, but now Lyft is finally getting its game. I always think Uber is the way to go, but Lyft has some low-hanging fruit under new CEO to continue to at least probably outperform on a percentage basis Lyft over Uber over at least the next couple of months. Snowflake I like, Intuit, Netflix. I do want to buy an ETF to get some international non-US exposure. I use ACWX, Spotify, Tapestry. Yes, Professor Meeks is into Tapestry, which is a consumer discretionary name. It is Coach bags and Kate Spade products. Uber, I still like. Cadence and electronic design automation. Autodesk is a company that I didn't like for a long time. Had a good quarter. It's pretty cool. I already talked about Robinhood. Guidewire is very interesting to me still. And two of the spinoffs from General Electric, GEV, GE Verona, and GE Aerospace. So I also think you should at least keep an eye on either on price or for certain other fundamental reasons I have in the bullpen, but I haven't brought into the game yet. Zscaler, Boeing, CrowdStrike I like, but I was a little bit freaked out by some of the financial accounting treatment, which I thought was too aggressive that I noticed when they reported last quarter. And then if you are going to play stablecoin, it's crazy expensive, but I'd still rather see you buy Coinbase rather than the recent IPO Circle, which I think is egregiously expensive. So next, let's get into some of our tech trends. I want to hit one thing before I introduce our special guest. You know, I like to follow interest rates because you know my philosophy is even though you don't follow this stuff like I do every day, you cannot have a sustained rally in tech stocks and continue to support these higher and higher valuations unless you have rates going down. And so it looks to me that there is only a 20% chance that the Fed will lower rates at their next meeting, which is at the end of July. However, there's an 80% chance, so it's going to get done, that they are going to lower rates for the first time since President Trump has been inaugurated, and they will do that on September 17th. But all in, it looks like we'll have 2 rate cuts this year, 0.25% each time. Before Trump was inaugurated, as we moved from 24 into 25, the consensus view was the Fed, our central bank, was going to lower rates at 5 separate meetings in 25 for a total of 1.25%. So obviously that has been dialed back. We'll be lucky to squeeze out 50 basis points this year, and even that is a bit controversial. So now I would like to introduce not only how we're going to look at this segment going forward, but our special guest for today. So, as you know, I was a college professor, and I was a college professor for about 25 years, either adjunct or full-time, and I retired in the middle of May, so recently. So what I'm doing now is I always manage dough. You know that. I have a tech model. 17 Asset Management is my shingle these days. But also I'm writing research primarily on quantum computing companies for a firm called Water Tower Research. Check us out on watertowerresearch.com. And we have a great tech team. I'm only one of 3. And I'm going to have these guys on because they are institutional grade, smart dudes who are helping me see the future, because that's really important for positioning tech portfolios. So you will hear much more from this co-branded segment between Benzinga and Water Tower Research going forward. But instead of giving you a ton of different themes, I'm going to choose one of these special guests, and we are going to delve a little bit more deeply into single themes. I think that overall, it'll be much more impactful. And then we're also going to get on some great guests. I'm going to have my 2 buddies from Water Tower Research on our tech team. And then I also might have CEOs and other influencers in my space of quantum computing and elsewhere in the technology sector. So without further ado, let's announce our next guest. I love that intro. So with me today is my compadre from Water Tower Research, Dr. John Roy. And I will tell you that I first met John late 1980s. No, not 1980s, 1990s. If I said 1980s, John, that would probably date both of us.
Yeah.
But we were both working at Merrill Lynch. John was working with a mutual friend by the name of Steve Milanovic, covering some semiconductor and hardware names. And I was at Merrill Lynch Investment Managers, the asset management group, and managed the tech funds. But this is a smart dude. Go into Water Tower Research, check on our team, check out his bio. I kind of backed in to tech coverage. I was a history and poli-sci major. I went to Wall Street to make dough because you can't make a lot of money talking about the Gettysburg Address. But John is the real deal, technologist, and comes from that perspective. Obviously a PhD, all the right background, all the right schools, but has also been a institutional analyst for a long time. So John, hopefully I did your intro justice. We're going to have you back. But you have something to share today with the student of the day, which is not just drones, small drones.
Correct. Not the big Reaper drones, the smaller drones, the one-shot drones, the drones that you hear all about in Israel and in Ukraine, and are seeing a pretty big tsunami here in the U.S. So what the tsunami is the U.S. government has said, that's it. we're getting rid of the Chinese drones in the United States, particularly for the feds. So what that has done is created what you might say a transition vacuum. So a transition into a vacuum. These guys have to leave. Someone has to come in, and you're seeing a lot of small companies really try to fill that space quickly. So when you say drone, I mean, it's the 4-rotor drones, first person view, FPV, right, where you have the goggles and you're driving through it. So they're really 3 different types, right? They're military, they're consumer, and there's commercial. If you look at just the military and the commercial market, they're each around 20 billion a year in the US, which might surprise a lot of people. The Chinese company that's probably got the largest share is a company called DJI, and they're going to be being pushed out by the FAA and the FEC. So they're going to be moving that out. And what's happened recently, I just want to get this pointing, it kind of fits with what you were talking about in terms of timing, is the big beautiful bill has a lot of money in it for what you might call new drone capabilities. So that's what they call one-way attack drones and also anti-drone, right? So one of the big issues that the Ukrainian situation and the Israeli situation have exposed is if you park a semi-truck within 20 miles of an airbase full of drones and all of a sudden one night they take off, that airbase has problems. So now they need anti-drone defense systems. So there's a lot of efforts in there. And the drone space is just going nuts. The guys I visited yesterday here in actually Orlando, they're building a brand new factory, all US supply chain, et cetera. And that's pretty much key to this kind of vacuum getting filled.
So let me ask you this. Usually, at least in my experience covering tech and tech-ish, it's the strong get stronger. It's the 80-20 rule. Yeah, 20% are some companies that will make it. They have some cool emerging technologies, but 80%, goes back to the incumbents just because they have the dollars to spend on R&D and also to spend on M&A. Do you think some of the current defense contractors and other types of contractors that play even in non-military applications will dominate, but is there really a chance for these smaller emerging companies?
There is a logic there. I would agree. Let me give you some counters to the normal logic. One is the defense business is huge. It's massive all by itself. I'm just talking about small drones. The problem you have is you got a large defense contractor. I mean, the Reapers are what? 75-foot wingspans? We're talking drones that are like this big, right? So totally different animal. In addition, I was talking to one CEO yesterday about it, and he says, look, one of the issues we have is the Chinese, let's be honest, have done a really good job in this space. So they've set the bar for consumer and industrial and military expectations very high at a very low price point. So the difficulty, like you said, remember about the Apple iPhone, can be built.
Yeah.
All these drones have to be built in the US now. So how do you get that level of performance at that price point? Hard for a defense contractor to do that. Let's just put that. Normally, I would say, yep, big guys are going to win. And if they see a small good guy, they'll just buy it, right?
Right. And they try to snap it up before they go IPO.
Right, exactly.
Is there anything in the, not the big, beautiful bill, but in the current trade negotiations, right? Those deals are supposed to be signed in 8 days about this. Like, we know that the Chinese want to have students come to Columbia University and they want to have Nvidia chips. Will part of the package that's negotiated give us access to their drones?
That's going to be a little trickier, I think, mainly because they're looking at, think of Huawei, right? They're not anywhere in the United States right now. So with that situation, I think you're not going to see it negotiated out. There's 2 reasons. One is legislation has already been passed that says we want to get rid of this. And then from a defense standpoint, obviously the military is saying, no. That's pretty simple. And obviously what a lot of people this year, the 2 CEOs I talked to in the last week, they're waiting for the defense budget, right? They're looking at that budget saying that's going to be a key catalyst. Because what they believe the industry needs right now, let's say that there's 50 small drone companies. Now, these could be microcaps. I got a couple of those that I work with. Unusual Machines, UMAC is one for sure. And ONDS is another one. They're actually going to be both speaking at our symposium, which is going to be July 16th. Yeah, it's going to be really neat. It'll drop on July 16th. It'll be a drone-focused symposium for small drones. We'll have 6 different CEOs talking about how the business is changing, how the opportunity is there in this vacuum that they're trying to move to. They all want to raise money.
Yeah.
And what they all see.
John, how would our viewers access that? Go into Water Tower Research's URL and find a link?
Yep.
Right. Yeah, one of the cool things about Water Tower Research.
It's on the screen. Yep. And all you got to do is give your name, and then you can read the research. Just, it's open research.
I'm coming. Yeah. So that's an interesting thing, guys. I've been at this game since the 80s. John's been also around a very long time. But quite often the sell side or the investment banks that publish research for them is a loss leader. They are just feeding investment bankers with hopefully relationships so they can do the next stock or bond deal or some M&A. Our firm gives away the research to retail and institutional investors. We're paid by the issuer, but you don't have to be a Goldman Sachs customer to get a little piece of John Roy. So this is very interesting. We like the model, institutional caliber research, but totally independent, no bias. So anyway, like there's a good example, the symposium's July 16th. I will be there. Hey, John, we really appreciate it.
Anytime.
John will be back talking about drones and other things. I'll have some other associates of mine from Water Tower, but we are going to make this Tech Trends segment something special. Institutional caliber, totally independent research, really interesting, looking at, interesting private companies and public companies. So with that, I will bid you adieu, John. I will bid everybody else adieu too, since we're getting past our witching hour. Won't be able to take any questions today, but if you have any, again, ping us and check out watertowerresearch.com. All right, everybody, we will see you next week.